Well, we've made it to the third week in January. I'm sure you've heard the rumors. Everyone's leaving Austin. The town's shrinking. The jobs are going away. Nonsense. According to U-Haul, Austin was a top three incoming destination for movers in 2025, and all three markets were in Texas. We continue to be one of the top growing metros in the country. We were ranked third nationally. In fact, the past 2 years, we were ranked fifth. So we're moving up the list. Also on the list, Dallas, the Dallas Fort Worth area, and Houston. So there's your top three. You also have North Carolina, Arizona, Tennessee, South Carolina, et cetera. So even some of the markets that may have gotten overpriced during the pandemic, that's a different problem, price. And we've started to solve that problem by bringing our price down over the last 4 years. But in terms of incoming moves, we still have the population coming this way. Well, where else did Austin rank in 2025? This was kind of a fun story, and it has a bunch of different rankings. I'm going to run through these with you fairly quickly. We'll start with the real estate stories. Austin was ranked the number one housing market that has survived every crash and will again. And of course, you could argue we've had our crash this cycle. We went from 2022 prices down to where we are now, 2026, probably seen home values anywhere from 20 to 30% correction. So I'd call it a slow but steady crash. But we're seeing signs that that could start to turn around. We are the number 7 metro nationally in terms of volume of home sales. That's not necessarily a bad thing. That's saying that activity with sellers, that really has to do with development more than anything. We are also the number 2 and number 9 city with the most new homes. And again, development. So we've seen our prices adjust. They're saying we're going to be fine because Austin has always rebounded after any downturn in the housing market. When it comes to industry, this is where we're really shining. Number 1 best city in the US to launch a startup. Number 1 most supportive of small businesses. Number 2, highest amount of companies that moved their headquarters, just behind Dallas and Fort Worth. Number 3, top U.S. city for job opportunities and earning potential. And number 4, best place for recent college grads to find work. You get the idea. Austin still has a great pro-business environment. And I think we're going to see that become a tailwind for us once the supply and demand and price balance gets back in order. I think you'll see housing pick up again. Growth, number 1, rising powerhouse, cities making America's economic future. We have a 51% GDP increase, 33% median earnings have gone up, 71% in business applications from 2019 to 2023. So again, tailwinds for the market long-term are fine. Number 3, best big city to live in. Number 4, top growth, or number 3, top growth metro, behind again, Houston and Dallas. And number 9, least stressful airport. I can attest. I'll tell you a story offline, but I can say Austin's airport, in my opinion, was better than Dallas, London, or Madrid. So take that for what it's worth. And finally, wealth. One more category, culture after this one. Wealth, number 1 hotspot for affluent millennials. Number 1 rental market for college grads. Now, we'll talk about rents in a second. One of the reasons is rents have softened because of all the development, which I agree with, making it a great rental market in the short term for those moving here. And number 5, most affordable city in the U.S., most likely big city. Finally, culture, number 1 best city for barbecue, number 1 most festive city, number 3 for vegans and vegetarians, number 8 most fun. I don't know why we're not in the top 5 on most fun. But anyways, I love those rankings, but take them for what they're worth. Point being is Austin continues, despite all the downward pressure on real estate the past several years, Austin continues to be a top 5 or 10 metro for so many categories that over time, we're going to see that supply and demand balance come back as we continue to grow population. So what's that done the last 3 years? This is real-time data. This is active versus sold listings the past 3 years. Green is active listings. See the pattern? We have increased listings every year. So what's happening is the sellers are kind of stacking up. It's harder to see on these blue lines down here, but this is closed sales is all single family homes. So we peaked out in 2023 or in May, almost 3,500 sales in a month. We peaked out May 2024 around 3,200 sales, and we peaked out in May 2025 around 3,100 sales. So yes, we're still getting activity, but each year we've seen buyer demand just drop a little bit. The thing I really want to keep an eye on is see this big spike in December. Well, we really had interest rates noticeably come down well under 6.5. We're now sitting just over 6%. That's the first time we've been there in about 3.5 years. So will lower rates start to impact the shape of these green inventory camel humps? I hope so. We'll see if 2025 was the peak of inventory or if we've got another year for that inventory to kind of, peak over and start to get back more in balance. This is what it's done with the price. This may surprise people, but this is the single family metro sales price trend over the past 3 years. If I go all the way back to February 2023, we're about 429,000. If I go to December, we were 434,000. That's about the same. So there were definitely some rocky roads in here. I can tell you with certainty, this does not mean every house has been flat. We have seen properties see significant price reductions, but we've also seen maybe some other pockets of the market start to stabilize, maybe in that lower luxury range. I call it maybe upper middle class. I think we've started to see those stabilize. So what's happening is that's helping kind of keep that median home value up. And so anyways, good news though is we're not seeing the big drop off. That kind of happened on the tail end of 2022. I think what we're seeing now is this kind of bounce up and down as we stabilize on price. So we may have another year where we do that. But either way, we have not gotten close to or dropped below the 400,000 line. I expect we will stay above that again this year. Let's talk about rents for a second. So this is December data and December over the year before. So the top half is single family homes. The bottom half is duplexes. Single family homes, average and median sold price were just flat. So rents aren't dropping as much anymore, but they're starting to go flat. Days on market actually dropped just a wee bit. So single family homes at the end of the day are hanging in there, but we did see less leasing volume and we did see more listings. So again, higher supply, fewer people leasing, but for now, the pricing has stayed fairly flat on single family. Duplexes have definitely had a harder time. You are seeing leases down, but listings down as well. I'd call that flat, but we're seeing the prices down 5.5 to 7.5% on duplexes. My guess is they're competing a little more with that apartment crowd when you consider pricing of a duplex, maybe a 2-unit versus a 2-unit apartment. You're kind of competing more with apartments. And I think that's really pulled the duplexes down for now on rent. Finally, great news. Look where we are in interest rates. We're just around 6%. And odds are if you're a decent credit buyer, you're already down in the upper 5 range. That's the best rates we have seen again, for maybe 3.5 years. So we're starting the year in a much better place on interest rates than we have in 23, 24, 25. So let's see how that's going to play an impact on the spring market. If you are a seller right now, you still have to assume you're going to have a lot of competition. So it is still critical that we get the house in great shape. We price it well so that buyers feel like day one, that house is attractively priced compared to what they're going to go out and tour on the market. If you are a buyer right now, you've got some great tailwinds. You still have a great market, as I showed you at the beginning, to live in. You've got plenty of inventory to look at. Now you finally have lower rates. The only thing we don't know is how much more competition is about to show up to compete with you for these homes. We will see over the coming months. Anyways, hope this information was helpful. If you want to check out our videos, go to the YouTube channel at Ryan Kelly Group, click that subscribe button. And of course, if you know someone looking to buy, sell, invest, or finance here in Austin, now is the time to chat with us. Anyways, hope you guys enjoy your week and we'll talk to you next Monday. Thanks.